Hello, today is Friday, the 28th of November 2008. This is Brian Shannon from AlphaTrends.net. The market's closed. We had a holiday shortened trading session today. Mixed market here. The NASDAQ, the Qs that is, were down 25 cents or 0.85%. You can see we had very little volume here, and you can't look at that as really meaningful at all because of the shortened session. A lot of people weren't here trading today, but the market did hold up for the most part, and it's just a very quiet session back and forth, pretty much above and below that VWAP. But we, did close higher than where we opened for the day. But obviously, we're getting a little bit extended here on the shorter term time frames. That's something we've been looking at mainly on this 30-minute time frame. That we broke the downtrend line earlier in the week from the election highs, and that has brought us right now, based on Fibonacci, almost to the 50% retracement of the lows, the recent lows, to that high that we'd seen just again after the election. So the market, very noticeably, even before today, the volume is trailing off in here, and basically that means you have to just be very careful. It's too early to sell short with any conviction. This is a possibility, though, that maybe we've seen a lower high in here. I think breaking below this level, 28.80 or so, will give us reason for concern early next week. You also want to look again at this level here that has been defended, and I drew that incorrectly, so let me just go back. Here's where we've been drawing it off of, because this resistance here had acted as support on Wednesday, I guess that was. So this will actually be the more important level. About 28.60 is that number once again, and we do have a rising 5-day moving average, so even breaking below there wouldn't necessarily be hugely negative, not yet at least. Let's see if maybe we're going to get some trend line support in here. This is very similar to the way we had broken down back in here, where we had seen some trend line support. We had that strong 5-day moving average rising very rapidly in here, and then it didn't really become a good safe short until it got back below that 5-day moving average. So even though we've got the light volume, you still want to short term give the benefit of the doubt to the buyers here on the daily time frame. We're still obviously in a downtrend, and that remains something that you want to be aware of, obviously, because only price pays here, and even though we're getting some strength, it's within the context of a primary downtrend. Oil was down 5.5% today, so we've been looking at this as big volatility in here, perhaps at a turning point. That, as I said on Friday, that we really wanted to see this stock, or this market get above 45.5 or so before you can really start to think that maybe the buyers are regaining control. Perhaps we're getting a higher low in here. We'll see. It's too early to say, but I think breaking back below $40.80, then we'll probably test those lows. So still no reason to buy oil yet. If I get involved with this again, it's most likely to be with this DXO. But right now, there's just no reason, based on the charts, to get involved. The Russell 2000 did finish with a looking at the wrong thing, with a 1% gain here today. It was up 47 cents. Looking at Fibonacci here, you can see that based on the election high to the recent low, that we did come up and tag intraday, at least, that 61.8% retracement level. So that's something to definitely be aware of. This market has run very fast, a great distance. We're just at that 20-day moving average as well. So I think a little bit of consolidation and perhaps some pullback would be very healthy for this market. We've seen this nice pattern of higher highs and higher lows still intact in here, but I think breaking below this 46.20 level could lead us to maybe a test down near this 44 level, and that's perhaps where we'll see that 5-day moving average also catch up to the market. The semiconductors were down 32 cents today. That's a 1.8% loss. You can see that just below this $17 level, we're still seeing that that does appear to be an important level of resistance for this market in the near term. If we look at the Fibonacci on there, you can see that it does take on significance from the 38.2% retracement as well. So we've got the potential now of some support, in this area right in here, basically near about 1630 or so. 5-day moving average is advancing, so let's see if we get a pullback, if maybe that holds as support. And the XLF was up 2.75%. Citigroup just continues to push forward as well as the XLF overall, obviously. On the daily time frame, we're getting up towards that $13 level that we've seen has been important. Also, from the 30-minute time frame, we can see here that the election high to the recent lows, we've retraced 50% of that now. Actually, for the week, for just what was it? We had 3.5 days of trading. This XLF was up 31.1% from last Friday's close. So huge week for the financials. Wouldn't come as a surprise at all to see some kind of consolidation or pullback. You definitely don't want to be selling short into this, though. This is the type of stuff that can really hurt you badly as it just continues to grind higher. I think this level here at about $12 a share will be potentially important support, and then probably near about 11 and a quarter or so as that 5-day moving average maybe is met as well on any pullback attempt. So the SPY, the spiders, finished with a 1% gain. You can see it was just a little grind higher in here, particularly later in the day once we got back above that daily VWAP. That daily VWAP was tested as support, and then it was again, like I said, higher right into the close. For the for the most recent, from the election high to the recent lows, we're getting very close to that 2/3 retracement up in here. So that's something to be aware of. This is just a potential area where the market may encounter some selling, where buyers may start to go on strike and say it's retraced 2/3 of this prior decline, so I'm going to hold off. So what we might start to see is less demand and more supply, and this could be a pivotal area near about that $91 level. No reason to sell short yet, though, because we've still got these higher highs and higher lows. Shorter term, I think 88 and a quarter is important. The 5-day moving average will obviously be important as well, down near 84 and a half or so, and then this level at about 86 and a half. But the market remains in a primary downtrend. We're getting another huge bounce in here, better than 20%, and that tells you that these bear market rallies that occur very quickly, it's time to just be very defensive, have a plan for locking in those gains if you haven't done so on a good percentage of it so far, because the market will remain very volatile, I think.